Founder Space, Startup Supercharged. I am here today with Roland Siebling. He is the CEO and founder of Midstage Institute. Now, Roland's an interesting guy. He has gone through 3 unicorns, helping them grow to become unicorns. And now he works directly with startup founders, helping them navigate the challenges they face and grow their companies. And we are going to talk because this is a special time. So right now, a lot of startups are struggling, especially if you're not a high-flying AI startup raking in hundreds of millions of dollars. Then you're one of those other startups, the other 90% of startups, which are being ignored by venture capital and are really struggling to raise money. So Roland, welcome to the show. And can you tell us a little about your background, about the 3 unicorns that you helped build?
Absolutely, Steve. Well, it's an honor to be on your show. I've been listening quite a lot, and this is an honor to be able to be here. Let's talk about the 3 startups that turned into unicorns while I was there. So each was a journey that took about 3 to 4 years, and moving from about 10 to about 1,000 people in those 3 years. So I've really been through that scaling part. The first one was in Belgium in the 1990s. It was called Telenet, and it was one of the new telecom providers. And now most people there were focused on what then seemed like a solid business of fixed line telephony. But I was lucky enough to be asked to develop this newfangled technology that nobody had heard of called broadband internet. And in those days, this was the kind of product that everyone over 30 did not trust themselves to work on because it seemed like too techy and too much out there. So luckily enough, me and my technical co-founder, if you will, had 100 people reporting to us while we were both only mid-20s. And that was an amazing journey, 900% growth rates for 3 years in a row. So you can only imagine. The second one was also in the broadband internet space, but that was more post bust, if you will. So that was in Switzerland. The company was called Bluewin. It was a internet provider run by bought, I should say, by the dominant telecom provider Swisscom. And they had been getting ready for an IPO. They had been building all these products and all these strategies, and then just as they were ready to launch it, the dot-com bubble burst. And so that was more of a turnaround job where we had to say, now, how do we actually move from this, let's call it hype creating, growth optimization towards more of a, how do we keep this solid? How do we make this sustainable? How do we make this into a maybe proper business, if I may use the word there, which I think is something I draw on a lot now that the markets are also changing and clients are asking for help. And how do we get this startup to survive, right? And then the third one was after I had moved with my own startup to Silicon Valley. I was based in San Francisco, and then I was involved with Rocket Fuel, which was one of the first companies applying artificial intelligence to the placement of advertising, so long before Google and Facebook did. And that was, again, an amazing unicorn journey, starting with just a few people and then picking up programmatic advertising, IPOing 3 years later. And then also seeing a lot of the pitfalls that we had not thought about, and unfortunately losing a lot of the share value again afterwards, which is also part of the story. That drives my passion in helping founders, avoid those pitfalls, making sure they focus on the right things, not the wrong things. Because invariably, Steve, as you know, founders are the first time going through this journey. Even if they bring it all the way to IPO, they don't necessarily have any experience in what they have to focus on. And that's, now that I've gone through it 3 times and always been close to founders, always been in some kind of a coaching position, I'm happy to share that with a lot more founders and make them successful in that tricky mid-stage.
So I'm very curious. Rocket Fuel IPO, that's the holy grail for every entrepreneur out there, and you're doing incredibly well. Then what mistakes were made? What happened?
Well, to the degree I can say, of course, I think one mistake that was definitely made was to promise the moon in terms of continuing growth. So part of the IPO prospectus was this company is growing is doubling in size every 3 months, and we can sustain that. And that, I think, is, as you know, mathematically almost impossible.
Is
It was
impossible.
it was nice to maybe say that to investors, and of course we had a huge pop of the price. I think the original range was 21 to 24, and it popped over 60 the first day. So, that was a good
Hopefully you
profit.
sold all your shares.
Well, if I had been able to as an insider, then of course it would have done so. But that's one of the dirty little secrets of Silicon Valley. Almost always employees are unable to sell their shares
Yes.
until at least 6 months after the IPO, right?
Mm-hmm.
So by that time, typically the price will already have come down substantially. We still made a good profit, not life-changing perhaps, but still had a good profit from it. But yes, there's a lot that was maybe hyped for that initial price, and maybe it was less focused on a sustainable price range 6 months, 1 year down the road.
And that's so easy. That's such an easy mistake for entrepreneurs to fall into. You drink your Kool-Aid and you believe it. You believe your own hype and you start, it
It's
becomes
a good thing you
this.
say that, because one of the things I keep saying to founders is, once you get to the mid stage and you're starting to prepare for an IPO, your Kool-Aid still needs to be there, but you need to mix it with a healthy doses of some truth serum every now and then, right?
Exactly. So you wake up and see reality that it's not going to be this hyper growth. We
At
saw
least
this in America.
internally, right? I mean, I understand that you may not want to sell this to investors, but at least internally, don't drink your own Kool-Aid and believe that everything is exactly like you pitch it.
Yeah, and because you're spending based on those beliefs. You're spending for
Absolutely.
growth,
Mm-hmm.
massive growth, and if it doesn't materialize, you're in trouble. So what ended up happening to Rocket Fuel? I'm curious. Are they still around?
They actually got bought. So I think the new CEO saw the writing on the wall, was trying to reposition it towards enterprise. But I think the quarterly predictions were falling short, and there were some offers on the table. And so ultimately they sold it off to a company that was trying to consolidate some of these programmatic advertising plays. And then I think that company also went down, and then that got sold again. So it's basically been in consolidating place ever since. I've lost touch by now.
Yes, this happens. We all ride the roller coaster of tech. And speaking of the
Absolutely.
roller coaster, there are a
Yeah.
lot of entrepreneurs listening now who are on that roller coaster
Yeah.
themselves. So I know you personally help entrepreneurs through this crazy journey.
Mm-hmm.
You've been through it 3 times with companies that were successful to varying degrees. Now, what is some of the most critical advice you could give entrepreneurs right now listening with their companies?
So one of the most critical points I often make is that do not just take any startup advice for granted, because startup advice is very specific to the phase that you are in. For example, I see many startup founders that take this gospel of build, measure, learn, stay agile, pivot around all the time, and still stick to that when they are 100, 150 people or more. At that time, of course, you're basically navigating a bigger ship, and you have to give people time for changes. You also have to sometimes stick it out longer. So that advice is one of those examples that may not actually be applicable anymore to your stage that you're in. At the same time, the opposite almost, they often hire people from large companies, let's say from a Salesforce or an IBM or whatever, say, okay, we need more executive experience. And then they start following playbooks that were really built for companies of tens of thousands of people, not appropriate for a company of just 100 people, too bureaucratic, too solid, too reliant on consultants and big teams. And so that's one reason why we said, the mid stage of a startup really has a different playbook than both the early stage and also then this kind of mature incumbent stage, right? People need to think different. And often this is how we can reconcile the, let's say, startup people and the professionals that they've hired on an executive team and have them aligned around the same playbook, rather than fighting it out all the time between, are we a startup or are we a professional company?
That's a really important mindset to have because
Hmm.
you are no longer a startup. You're not at the early stage where you can come up with new ideas every day, pivot, try something out, go a different direction. And then you're not at the later stage where you're the dominant player, things are pretty set, you're making longer term plans. You're kind of in that middle zone. So let's talk about that.
Yeah.
What are pieces of advice you give entrepreneurs in that middle zone?
Yeah, so you're absolutely right. I couldn't have said it better. It's almost like the adolescence of a person, right? Like you cannot act like a little kid anymore and be successful, but you also cannot act like a guy in your 50s with a suit on all the time. It's like you have to find your own way when you're like in your late teens, early 20s, right? And the same goes for a company. So to answer your question, Steve, the key thing I think is, what do you have in mind as the goal to achieve? And you mentioned that you're not a dominant company yet, but I do think that should actually be the goal, right? So how do you move from that initial product market fit that you have achieved by that time to what I would call product market dominance, right? How do you turn that small fit, that small niche, the people that love your product and are willing to invest in it, into something that you can start defending and that becomes unassailable? That I think is the key thing to keep in mind from a strategic point of view. And what that then means is that you have to navigate the broader market. You'll start to see more competition. How do you deal with that competition? How do you compete? How do you not try to boil the ocean with like 3, 4, 5 different products that are only tangentially related to what you had originally? But how do you keep
Hmm.
focusing on that one part that you actually have? Now, I think as you know, in working with founders, many founders are almost appalled at how difficult it is to build a go-to-market machine, to actually persuade customers, to keep them happy. And often they misinterpret that as like, I must be in the wrong area, let me try something else. And then they pivot and they try something new. And very often that is exactly the wrong recipe at this stage. It's often more about just sticking it out, learning how to be better at your go-to-market machine, at keeping customers happy, at collecting money, all that stuff that is boring
All the
in this
basics,
sense,
right?
right?
The
Uh,
basics that are often overlooked at the early stage.
because the founders we work with, Steve, I'm sure you've seen the same thing. They're not usually business people, right? They are trained
Mhm.
as engineers, as product people. They're
So they
visionaries
want to
very often.
so they want to build something new.
Exactly.
They don't want to refine and perfect what they built. Instead, they're off to the next shiny object, the next idea that seems
Yeah, and if
incredible.
and that's perfectly fine, but that means that you're not going to get to that like product market dominance that would ultimately, build big financial success both for you and your employees and your investors. So this art of sticking it out and just trying and trying again with the thing you've already found is, I think, a really important aspect of what I try to teach people.
Yeah, so let's talk about that. So entrepreneurs usually, they're looking for that thing, that one thing that competitors don't have, that the marketplace is in high demand. So
Mm-hmm.
there's their customers out there and they're like, I want that thing. They develop that thing that usually gives their company a boost. That's their entrance way. And they develop it and a bunch of other stuff along the way. And they get to this mid stage. And then things aren't as exciting because they've developed that core product. And they also they face competition because, of course, competitors are developing along with them. So they're not growing as fast. Frustration sets in, and they're like, well, we need another thing to give us a boost. And what you're saying
Yes.
is you don't need another thing. You don't need to develop another thing on top of this. In fact, you need to go the opposite. You need to pare down what isn't essential and focus on that core thing that you're going to win on.
Absolutely. And I think the other thing we often tell people is that it is actually less about the core product at that stage, and it's more about all the, call it, complementary assets that you build. For example, it's not about, adding features. Often it's about adding a sales process, adding,
Mm.
the proper marketing positioning, adding support so that people can actually deal with your product, adding customer success, sometimes even things like training and consulting resources. So the frame that you can often apply is to tell people, look, you're no longer building a product. Now you're building a go-to-market machine. Sorry, that's the other dirty little secret in Silicon Valley. It's actually less about the product than building the go-to-market machine, right? As
Right,
you and
because
I know.
you
Go
found the
ahead.
product market fit. You found
Yes.
that, right? You wouldn't have got to the mid stage without it. So you know that customers want this, but then how do you compete? And like we know, the product is one thing, the feature set and everything else, it has to be good and it has to do what they want. But at the end of the day, their decision to stick with you or choose you is based on a lot more than your product. Like you say, it's based on all these other, can they get support for it? Do they understand how to use it? How do they integrate it into their business? Can you build up a pipeline, your sales pipeline, and refine that so your customer acquisition costs are low? So this is the area where you come in and really start to address these issues.
Absolutely. And I would say it's not only about do they stick with you and are they willing to invest in you or fund you,
Hmm.
but even how do they find you, right? How
Oh
do
yeah.
they even know your product is out there? And so I think that's often the kind of engineering mindset or product visionary mindset of the founders will lead them to think like, oh, this product is simply not good enough because guess what? It never gets close to your original vision, right? That's idealistic in your head. But really, if you look at all the successful companies out there, which one can we truly say has a perfect product? All the products are to some degree shitty, if I may use that word on your
Yes,
podcast.
we use these products, Facebook and all these other ones, and there's a million things I would change.
There's a million things that are wrong with them, but the success of the company is defined by the founder caring less about that than caring about market success, right?
Hmm.
And whether that's virality for a consumer product, or it's like a solid B2B sales process, or it's product-led growth, or any combination of the former. In the end, it's all about founders saying, essentially, my product is good enough, or my innovation pace is good enough. And now we need to build that market and we need to get customers, set ourselves aggressive growth targets, and keep those customers. And that's how we build a successful company, not about the product anymore.
So can you tell us any anecdotes or stories about entrepreneurs who face challenges in this area in the mid stage and actually overcome them?
Oh, yes, absolutely. So one customer I worked with in Switzerland, they had it was a very good software development kit, basically replacing some kind of open source solution with something that was much more solid. And they were able to sell that to customers that were looking for a more premium solution. So let's say when everyone uses the open software version, it was constantly faulty, and they said, with our product, yes, it's paid, but you will get a far lower error rate, right? So initially they kept just adding features to that software to make it even more powerful, but they kind of lost the script with the people because they said, all I'm looking for is a better replacement for this open source software. I'm not actually looking for all these additional features that I'm not even sure my product people need, right?
And
And the other,
actually features can make it more confusing for people
yes,
because you have all these features they don't understand, well, what to do at a certain point.
that's exactly right. It makes it confusing. The other thing they did wrong initially was they had no post-sales support because they said, well, it's
Mm.
an SDK, so people will just figure it out and we have documentation. And it
They're
took
like us,
them.
they're engineers.
Exactly. And they were, right. And,
Yeah,
generally when you talk to them, engineers will say, I don't need that, right?
yeah,
But
yeah.
then, of course, because they pay for it and there is a license fee involved, people do expect a certain quality and support. And so it took them years before they actually started building a proper customer success function, checking
Mm.
in with people, seeing where their problems were. And then you actually find the features that
Mhm.
you need to build to make the customer happier with your product. But those features may not be proper engineering features. It may be simply things like, oh, there's a dashboard that shows how many errors you had and what you can do to resolve them, right? All the boring stuff, if you will, that actually helps
Mhm.
the customer do their job better.
So when they did this, when they refocused, and you were helping them, there's what happened to their sales? how did it change their business?
So their sales were already growing well, but they were really stuck in that like early adopter phase, right? So I think we all know the crossing the chasm framework, and
Mm-hmm.
that was very typical there. It's like we went through a list of all their major customers, mapped them at like, are they innovators, are they early adopters, are they early majority? There was only one that was early majority, and that customer was actually at the time at risk of leaving because they said your support is not good enough. And that really opened their eyes to see, oh, we have to reinvent the way we position our product. We can no longer focus on just the tolerant early adopters that keep that will figure things out just like the likes of us. We have to realize the big market is in the early majority, maybe the late majority later on. And how do we compete there? It's with references, it's with support, it's with integrators, it's with consulting, documentation, all that stuff that nobody really thinks is the real product, but that actually matters the most, right?
Yeah, and they probably didn't have people on their team to even do most of those functions. So
No, exactly. They needed to build that up from scratch, and very often that takes 6 months to a year of like repeat workshops where you keep making the same point. Again, it's not my job to make the decision, but I can only point to what other companies have done at that phase. And to come back to your original question, Steve, as soon as they got that fixed, their sales started tripling, quadrupling, and they made unicorn status, I believe, less than 18 months later.
Oh, fantastic. So it really worked.
Yeah, it did
It
work.
really got them.
Absolutely.
It
Yeah.
got them to that dominant stage that they needed to go to in their
The
business.
problem, Steve, is that very often the thing that holds you back is a complete blind spot for you, right? So it's almost impossible, in my experience, for people to figure out for themselves what they need to resolve, because it is often a total blind spot, sometimes even something that causes some resistance in your mindset. For example, this company that said we don't need customer success because it's all tech people, they don't need that. They say they don't need it. Why would we fix that, right? And of course, what happened is that they were focused on one segment in the market and didn't realize there was a much bigger segment lurking just around the corner who were just waiting for them to launch their support resources.
Yes, yes. Bigger companies with more people who expect that support. They're used to it. They're not like
And
them
guess
hackers
what?
who,
And guess
yeah.
what? Are willing to pay for it big time too, right?
Yes,
So they were
exactly.
able
Those
to
are the ones who
increase
will,
their
those are the
price
ones who will,
increased. I think they doubled it, if not 2.5 times higher for those folks, and they were happy to
wow.
pay for it.
Yeah, because they're with a big company. They have the money. They just don't want to hassle. So,
And they need somebody
so
to
really,
see their A, right?
yeah, exactly. So let's talk about right now. So
Yeah,
right now in the marketplace, what we're seeing is a few companies are getting all the gold, right?
yeah,
All the venture money is going to a few companies. We keep reading about them. Well, the majority, the vast majority of companies are struggling.
yeah.
So what advice can you give to like mid-stage startups out there that are really struggling financially? Um, how can they navigate this current climate?
Yeah. So I think it is important for them to kind of embrace this reality and properly assess where they are. So, most of us are not in the core of generative AI, which is attracting all the money at this stage. And so that means if we're dependent on the overall venture market is in a slump right now. Now, will it turn around? Possibly. I personally expect us to see more successes again in 2024. But that still means that at this stage, you can no longer play the playbook that used to be the common one until 2 years, 1.5 years ago, where you just keep funding everything with additional rounds of money, right? It means in order to thrive, you have to survive. And that means you have to find ways of stretching your runway longer. And that typically means optimize less for this growth at all cost mentality that you were probably taught by your own investors as recently as 1 year ago, right? That is what you can no longer afford. And I think that's where many founders really have to look at their company through a new lens, sometimes with external help, and seeing how many of the things that they're doing are actually all driven by that growth at all cost mentality versus solid business that's already there that could actually be profitable but is burdened by all the extra expense that really at this stage you cannot afford.
So yeah, just spending on customer acquisition is not necessarily the best strategy in the current climate. Actually focusing on the customers you have, creating
Yes.
more value for them, stripping away, unnecessary costs while figuring out what they really, really need. Like, what are they really after? There may be things that a lot of these startups are offering that aren't that valuable to the customer. They don't even know it because they haven't had those conversations.
Absolutely.
So,
So what we often do is some waterfall charts. So one is exactly like you're saying, okay, how much are we getting from current customers, growth of current customers versus new customers, and then the churn, of course, right? And how much are we spending on each? Very often, from a revenue perspective, it looks like, oh, that's kind of evenly spread. But then you look at it from a profit perspective. So after you take away the cost there, and you suddenly start seeing there's one highly profitable segment, which is usually current customers that could be growing more, right? And then all the other money is basically going down the drain in, as you say, customer acquisition in segments that are not interested,
right.
or different perspectives, right? You can do a waterfall chart also on a perspective of what's our core product versus what are some new products we have launched versus something that's still in the lab that we're spending a lot of money on. Again, this is all focused on trying to drive growth that at this stage you probably cannot afford to such an extent. I mean, I want to be nuanced. I want to say, like, of course, you should still spend some money on customer acquisition, but the point is be smart about it and don't overspend in terms of things like you would only see a payback in 2 or 3 years. That is what you cannot afford at this stage, right? Same for new products, same for new geographies, same for new channels. To a large degree, the advice is stick with what works already and try to strip away some of the other experimental, innovative approaches, not forever, but just enough so that you can survive and on your own accord until maybe the market turns, or until you have an attractive enough business to say this might be acquired.
Yeah, and also, how do you get more value out of these existing customers, right? Because you already have them, you've acquired them, you can talk to them. There are things that you may be able to give them that you may be able to charge more for that aren't a lot, heavy R&D type things.
Absolutely. And that almost comes back to our previous points, right? That companies are often heavily driven by what are the new features on the roadmap that we're trying to drive. But if you focus on current customers, very often that's not actually their main concern. What may be their main concern is like a generate PDF button that hasn't worked for 3 years, you know.
or some sort of support mechanism or training.
Yeah, or invoices that should come on time, or something simple. And it's almost always the experience of people when they do start talking to their biggest customers that some of these things are way too easy to solve and nobody's ever picked them up, maybe because they just weren't exciting enough. And this is,
they just kind of get lost in the shuffle of,
yeah, exactly. And this is something, Steve, that maybe I can point to here. I feel a lot of founders and a lot of executives in startups are ultimately driven in their decision making by dopamine. So
we all are today.
we all
Look at
are.
social networks, right? They've trained us.
Absolutely.
Don't
And
get
the
that
reason
dopamine
why why we like startups in the first place is because of these dopamine hits, right? But I do think that if you do want to bring your startup to a level where it's sustainable and it builds a big market for itself that's defensible, then you have to be able to at least identify, is this a decision I'm making rationally, or is this a decision I'm making because it excites me, because it's a dopamine hit, right? And at least be able to take a distance from that every now and then.
In our society, we are addicted to these dopamine
Oh
hits,
yeah, absolutely.
and the whole internet has been engineered around them. And now it's very hard, and it bleeds into our business, right? Because we think, it's not just entertainment that's hitting us, or social networks, or, contacting people. It's like literally every aspect because we get accustomed to it. So it is a big actual social problem that sometimes having somebody from the outside who isn't like, on the treadmill with you, who can step in and say, look, why are you doing that? Because it's exciting, or because your business is demanding it? And
yeah,
that's a hard, like you say, you pointed out earlier, it's very hard, when for you to see that, because you are so driven by your own internal impulses that a lot of times having external consultants come in and really ask those hard questions can open up a path for you that you don't see.
Absolutely, you got it. And I think the other thing to realize is many people that you've hired who report to you really don't dare to say as much to you as you would like them to.
Yes.
This is a learning for many of the startup founders we work with. We always ask at the very beginning of a workshop, as the founder, please make sure to speak last, to sit back, observe your team first. And it's almost always shocking how in the beginning they feel completely uncomfortable with that. And then in half an hour, you start seeing them loosen up, and then they start getting excited that, wait, that person, I thought they were the weakling on my team, but I'm so impressed with all their contributions. They're saying exactly what I would have thought, or what the priority should be. Whereas that other person, I thought they were my strongest. They're not saying anything. And then I ask, what do you think
because
that means?
they were just nodding and going yes, yes, yes whenever you
They
said
were
something.
they were exactly very, very good at being the parrot, let's say, right?
Yes. And that made you feel great about them, like they were completely in sync with you. But when you actually listen to them, they don't really have those ideas. Those were just your ideas. This is a
That's
really
exactly
good point.
right.
So I think we're going to wrap up here, and
Mhm.
I would like for you to tell our audience out there, all these entrepreneurs, how they can reach you, and anything more, any last words you have for them.
Yeah, so we've collected quite a few resources for startups that are going through these tough times on midstage.org/thrive. And that is really a collection of a profitability tool. How do you identify those profitable tools that you have already, and strip away some of the growth investments that you may not be able to afford at this stage. There's also my contact information, the links to my books, and the resources that my other colleagues at Midstage Institute have pulled together. So that's where I would start, midstage.org/thrive. And of course, feel free to connect to me on LinkedIn or email me as well. All the coordinates are there.
I'm Captain Hoff, CEO of Founderspace, the leading global startup accelerator. I'm also author of the award-winning books, Make Elephants Fly, Surviving a Startup, and The 5 Forces.